next question is from, I believe, Amir. Hello, Cherif. What retailers QSRs are growing in this market since large retailers like Macy's just got delisted? What retailers QSRs are growing in this market?
Well, in this, if we're talking right now, we're the first week of April. I would say let's wait to the end of April or May, and then you should Google QSR's growth, fastest growing companies today, and we will see what's happening next. Right now, practically everything is on hold, but we know from history that the companies that do well are the companies take advantage of times like this because they know they're going to do better. The pizza places, the food sandwich places, etc., etc. You're not going to see a lot of growth on jewelry stores or retail stores. So I don't want to answer it as it's the answer of all answers because we don't know exactly what's going to happen in May. What I try to give you is the principles instead of exactly this. You know now that we need to look at fast food companies that are going to grow. Let's Google that in May and see what's going on. And that's how we do it. And usually the size is about 2,000 square feet. Usually they want to be next to other food places because they piggyback on each other. So understand the principles. Once you know the principles, you can apply as market changes, etc.
So I have an interesting follow-up comment. Again, here's a light bulb going off comment, which is, so with these corporations, the security, this is why you go after corporate tenants. So I think what the comment actually means is basically with this unexpected downturn, this entire coronavirus pandemic, the corporate tenants basically have, secured your investment. So you have a little bit more safety than somebody who, doesn't have a corporate agreement or a corporate guarantee on a contract, right?
Yes. Because these national tenants, when they sign the lease, it has a corporate guarantee. That means we guarantee to pay no matter the results on that location. Now, we've had some tenants. We've had a Burger King with one of my students also, who actually, the Burger King is a large franchisee. I mean, this guy, I think if I remember, had 21 locations. And he sent an email to my student friend and he said, can you contact us? We're trying to see if you can reduce the rent a little bit. So we had that conversation. I told my friend, I said, look, you're under no obligation to do it, but it will be wise to say, listen, go ahead and pay me 50% for April and May, and that extra 50%, I'm going to defer it. You can pay it over 6 months period later. What are you doing? You're doing a goodwill gesture. Are you obligated to do it? No, they're Burger King. They're going to make it. But they've gone through 2 months of not even an opening in the store. There is zero traffic. So it's a good gesture to make. And remember also that the government is giving a lot of small business loans, a lot of advanced forgiven loans, etc., etc. So you can work with these tenants. The good news is I prefer to work with a big national tenant who's asking for a month or two. Let me pay 50% now, I'll pay you the rest later, than a small mom and pop or a residential tenant who says, well, I just lost my job, I don't have any money. That check from the government is going to feed my family. You have to have heart, you have to work out a compromise, then they can move on.
All right, next question is from Jamarcus, or actually a comment. I already own the building. I want to partner with the fund to make it happen.
I'm sorry, I already own the building, and then what else?
Yes, as I already own the building, I want to partner with the fund to make it happen. So if somebody owns the building, how do they partner with the fund? I think it's kind of...
Well, they can partner with the fund to then grow and own more buildings, or actually partner with the fund to eventually set up their own fund within a year later after they learn how to raise capital, because the easiest way to raise capital incrementally is to raise into my fund because it's up and running. So when you have clients or you're trying to build a clientele of investors with you, the biggest challenge you have when you're a syndicator, when you're a fund manager, is you find a good deal. And let's say you have to come up with, say, 500,000 down payment. By the time you talk to 10 people and they commit, and the time you get the deal and you get them to give you the money, maybe you come up with 250,000, you're short money, and you have to rescind the deal, cancel the deal. It's much better if you have the money sitting somewhere, and then you're able to take the money out and buy properties. The way to do this, the way to bridge that gap, is for you to become part of my fund as a co-sponsor. This is what I taught people. This is the shortcut to success. And then what they can do is, as they raise capital, they're raising it into the SFI fund, which is the fund we have that produces income for these people. So they put the money on Monday, they start accruing interest on Tuesday. 6% and 8%, depending on how much money they put. And you as a co-sponsor also get paid on the money you raise on a residual basis, on an ongoing basis. So what ends up happening as you pull enough money from enough investors, those are your clients, into my fund where you're co-sponsor with me. And then what happens, you have the 500, you can then call the money out of my fund and go out into your own fund. Now, for this gentleman's situation, you already have a building. You can actually come and join me as a co-sponsor, raise enough capital for the fund. When you have enough, you can sell your property to your own fund. I'll help you branch out, copy my private placement memorandum, and then have your group buy your property. So you will sell it once into the fund that you own. You will continue managing it and getting part of the cash flow as a syndicator, and then sell it again 4 or 5 years later and get paid again. It's like selling it twice. And when you sell it the first time, you cash out money, go buy another building, get it settled, get it to perform, and then start syndicating it little by little because you already own it. You have now a momentum. That strategy could literally change your mind. I explain it in details in the Puerto Rico event. I explain it with numbers and showing people exactly how you can start with nothing, or you can start, if you have one building, you're already ahead of the game, and then you build from there.
Hey, Cherif, Malcolm is asking, is subleasing for income an attractive hedge alternative to buying and assigning?
Yes, absolutely. If you can get a seller to let you lease and sublease with an option to buy, it could be a great way to have cash flow with the least amount of obligation and least amount of money upfront. Yes, for sure.
Cherif, great question here from Sean. It says, Cherif, Sean here, would it still be possible to apply for a UCC1 listing in Florida for a JV student looking to buy the building with a national tenant coming in, or the banks may be a little bit more cautious?
Okay, let me define the UCC1 filing. UCC1 is the Uniform Commercial Code. Sometimes when you're getting the property and it's under contract and you get a national tenant to come in and you got that letter of intent saying they're going to sign for 10 years or 15 years, you can try to go to the bank and say, I'd like a loan against that building. But all I have is this little down payment. Some local banks may say things like, okay, we'll give you the loan, but we want that tenant. Of course, they're going to verify with the underwriting department is going to verify with the national tenant that they are committed to the space, etc. And we want that tenant, when they sign the lease, we want you to assign the lease to us. So the tenant will have to send the payment of the lease to the bank, and then we deposit it in your bank account and then get the payment out. If you don't actually allow us to do that, we're not going to give you the loan. So once you approve that, they give you a loan on the building and they record an actual lien, a mortgage lien against the property or trust deed lien against the property. But they also record against the lease, which is the business income of the building. They record what's called the UCC1 filing. They do that filing, protecting the income from the building based on it being a business. So the bank ends up with 2 liens to protect themselves. One for the mortgage, the money they gave you for the actual purchase of the building, and one UCC1 filing to protect themselves that lease transfers over to them in case they need to foreclose on you. So can you do it? Yes, you can do it. We predict the banks will ask for a bit more down payment now, slightly different terms. I give you an example of what I mean by slightly different terms. Let's talk apartment buildings for a second. We were looking at deals where the lenders were doing 30 years, doing 7. So you have a low interest rate, 30 years amortization, doing 7. But now they're going to probably do 25 years, doing 3. That's what the talk is. That's what they're talking now. Now they may stay very generous. They may try to do that to continue the economy going, etc., because they're going to work with the government. But the thing is, they are changing some of the criteria, some of the terms, etc. So we have to be very tuned to what's going to happen in May and June, and then we see what's going to happen by year end. Hello, Cherif Medawar here. I'm a real estate hedge fund manager. My fund is called MIXIF. We've been in business over 11 years.